Hello, welcome. Today, the stock which I'm analyzing is the RBC. The nickname it stands for Royal Bank of Canada. The ticker names, as you can see, is RY. Today, they announced their quarterly earning for the second quarter, and this morning the stock price goes up by $5 to $6. But on the contrary, the earning was very bad as compare. I'm not say yeah as compared to the last quarter, which is expected in the market. But even then, the stock price goes up. And one surprising factor when I analyzed this the financial statement of the company, I find the company is, and they declare they're paying the dividend. That's good news. But the bad news is they're paying 108% of their net income. So now, when I see this, I have a lot of questions in my mind about the company. First, as usual, I'll start with how diversified is the RBC business, right? Because we never see this coronavirus or this kind of a problem. We see depression in the past, we see the market crashes, and how RBC did it. I'll cover that. I will also cover this, so because this is not like a regular business, these are the banks, so I won't cover like cost of goods sold, and because they don't have some certain things like that. For me, because this is the bank, I just want, and which is the backbone of any country or any economy. So I want to ensure so how the Canadian economic scenarios is projecting, and how RBC does by that. How much strong is their liquidity? Are they doing, what's the percentage of their loan? Are they very aggressive in their loan as compared to their deposit? How much extra buffer are they keeping? Are they doing bare minimum as what the regulator are saying? As you know, banks are heavily regulated, right? So they have to keep it, but are they just doing minimum or they are doing more? And also I will compare their this year earning with the previous year earning, and this is a little bit different, and this quarter as compared to the last quarter, as by the market condition, and see how they are behaving. So in general, so these are the questions in my mind, and let's start. And then we'll once we have all those underlying data from the top to bottom or from the different aspect, then we're trying to form an opinion about the RBC. Okay, so let's get started. I'm very interested. Okay, so first about its RBC business. Okay, diversified is RBC business, right? How diversified it is. Okay. Okay, yes. So RBC is just not the bank. Okay, so RBC does not only the deposit, it's the bank, but it has many different components. It's under its umbrella. So these are the business segment what RBC. So that's very good to know. So 48% is just the personal and commercial bank, which we know of as well. 21% of is the wealth management. Basically, these are the asset under management, the big companies or big guys who give the money and they manage their portfolios. So those are 19% of their business is capital market. So basically, they go and rich people money, and who gave it to them, and then they invest in the capital market. They do the risk. So that's what they basically, they are in more in those trading and all as well. 7% is the insurance and the treasury services. So basically, they provide some kind of a fund services. That's only the 5% of their business. Okay, so that's on from the business segment wise. On the geographical wise, RBC is not only in Canada, which is the major chunk. If you see from their business is 61%, but they also is 23% of their business is in US, and 16% of their business in international. Even for me, I'm pretty surprised when I noticed. I thought maybe RBC is in US and Canada, and maybe I was not even know about this in detail, that I thought it's only maybe 1 or 2%, but this is a fair amount of chunk outside. So that's very good. I really like it that their main dependency is not on the loan, right? So which give me good. They are well spread out. Actually, over 50%, if you see, 52% of this business is spread out, which is a very good factor. Okay, next is this is their asset under management. I like this, so I just picked this one. So under asset under management, if you notice, they are which is the nickname is RBC GAM, the global asset management. They rank #1 in under asset under management, right? And they managed the total industry net sales for the past 12 months. The data 84.3%. So the total industry, the assets in this is on the Canadian side because it's a Canadian bank. They also have US side, but I'm here showing on the GAM on the Canadian side. So 83% or 85%. So they're #1 in this business, or they're leading it. Okay, so that's well and good, because these, okay, so you see here this is 231, then 258 growth, and then even in the March is 61.1, and the sale wise is quite good as well. Now let's come to the impact by the business line on their bottom line, which we say, right, how much their earning is impacted. So by this current market condition, right, or this quarter, right, if I compare with the last quarter, so this light blue color is the last quarter of second quarter of 2019, and this quarter basically second quarter of this year. So I'm comparing with the second quarter for 2019 to 2020, right? So if you see here, the 66% of their net income is down, right, which is a major chunk, right? And wealth management is also down 28%, in which I have shown they are in global Canadian leader in that, so their business is also suffered. Capital market is much impacted as well. 86% of the business in the capital market is impacted. But good thing about the INTS and the insurance, they are both up, right? So they are up 17% and 50%. So it's not like everything is down, but so this is on the high level net income. So if I take the net income ratio on these, so it shows me that. Okay, the next is, this is their the high level. So this is a year over year difference, and this is a quarter over quarter, right? So let's say, so the revenue is dropped by 10% if I compare this to the last second quarter of 2019. But if I compare with this previous quarter, even with the same year, it's almost 20% the revenue is down, right? The net income is over 50% down, right? So I'll show you in range as well, but I just want to give you the ballpark how when we go to the financial statement, we'll see the multi years the trend, how much there. So so we can easily see here, this is like a double. It should be double, but it's down. So right now, if I'll say if you buy a share, you'll get $1 earning per share, right? But if it's 50%, almost more than 50, so it should be around $2 something, which is the correct value. Okay, so this is the very high level summary of that. So far looks, but this is expected as well, right? Because I didn't expect in the market conditions is bad. So this is normal. But now the thing is how stable. So up to so far, I think is known, and this is well known. But good thing about what I find so far is that the business is diverse, and then they have not only geographical but many business segments. But I really want to see how they are strong in terms of the cash or the liquidity, right? Which is the backbone. What will happen if another wave come, right? What? So that's what the questions are still in my mind. But I want to we want to see from a different aspect as well, for sure, right? And you see there, this one, the provision of credit loss. So PCL means how much loss they kind of expected. So which is up from last year is 564%, which is $2.8 billion, right? This is the loss they are expecting on the as a whole. And from the quarter to one quarter, it's 575%, right? So that's what they are allocating this capital for. That's why you see this is down. So this is a negative number. Okay, now let's go to the books. Okay, so this is the quarterly statements I'm showing from this is the current from today, it's published. So you can see second quarter of 20, then first quarter, then 4, 3, second, first quarter. So it's going in the descending order up to 2018. So this is from now, and this is backward. And then this shows the first 6 months. This is a little bit different presentation of data. So first 6 months of 2020, and then last year first 6 months, and then this is the annual. So trying to see from different angles, right? To see how the revenue is doing. Let's focus on that. If you see, I already highlighted in green. So this quarter is 10.33 billion. It's coming in the revenue, right? Which is little shy over the last year. Last year, actually, if you notice, is a little bit last quarter, it was a little bit extraordinary, right? They make $12.8 billion. But all other years is pretty consistent. I have noticed around 11 billion quarterly, or 11.5, within 11.5 range, up and down. They are making last quarter 2019, and then pretty much 18 I didn't have much. So okay, but this year if I compare with 2019 last quarter, it's not that bad actually, if you see from the revenue generation. So maybe it's just a $1 billion less, right? Because the last quarter was 2 billion now. Okay, so if I compare with this one and this one, if I see the first 6 months, right, it's very important data to see. We cannot just see the quarterly. I think I'll slice. So we slice the data differently as well. If the first 6 months of 2000, so basically the past, if from the today to going back, the 6 months, right? So if we see, this is the $23 billion, right? And this one is also $23 billion. So it's pretty much in the same ballpark, right? And if I see compare from 2019 to 18, the revenue growth, you see the growth almost 4 billion growth in terms of the revenue. How they come in terms of the return on equity if we have invested that money. If you see, it's 17.6%, 16%. So it's very good growth. It's going 17% if you sometime in 16, but it's a little over 17 range. It's going, okay. It's going so that's what. But this year, this quarter is dropped by 10% if I notice, right? Okay, but otherwise it's 17. So when the market opens up and I should expect it goes back to the 17% quarterly. I'm trying to say here, right? Or even the annually, it's 1775, which is a very good growth rate in terms of the assets. Okay. Efficiency ratio. If it's what it's trying to say is all the non-operating expense over the net income. So basically how I read this, the lower is much better. Usually the benchmark is around 50%, but little bit over, I think, this year, because it's more expense this quarter and less income. So it's goes to close to 60, but overall I think it's here I notice is 50, 55 within that. So it's not bad. So, and I can see in other slide, because they are also increasing a lot in terms of digitalizations, right? In terms of the digitalization, mobilization growth and all, right? So I didn't put in the slide, but that's also I have found that they're not just on the go there and do the banking. So more app is developed. I'm the user of the RBC account and the RBC app. So it's very flexible and useful app. Unfortunately, I don't have the comparison with other banks app, but I don't want to do. But just if I want to focus on the RBC business, and as a consumer, I think it's doing pretty well. Okay, so on the now, if I see from their growth perspective, I have highlighted here. This is the dollar amount, and this is I have shown in the equity. But if you see from the earning per ratio, so this is the revenue growth. So revenue is growing 10% in the quarter one and 6 and 4%. So it's basically, if I see year, so 4%, it's almost double from 8 to 2018 to 2019, right? But overall looks consistent. Okay, so this is another good one, right? So which I have highlighted here in different colors. So basically, how much their income is coming from the non interest income, right? Because the bank business is what they get the deposit and they generate the loan, right? So they make from the interest they make the income. But what if the interest fluctuate, right? So that's their core business. Basically, that's a very old style business. But other than that, if they diversify in different kind of a business, which in the business lines we have seen in the first two slides, that is very good, right? So that income is over 50%. If you see 56, 58, 6 almost, right? And it's 57 and 58. If I see 2019 and 2018, right? 15, close to 60%, even at times of recession. So this means if the interest rate fluctuate and all, or the loan business, when people doesn't pay much, it doesn't impact that. So that's a very good point actually I liked about this business. Okay, this one I will show you later what that does mean. Okay, let's go to this is their dividend payout ratio. So usually they 40 to 45% the income. This is a rare, they paid 62, but otherwise 40, 48 they pay in terms of the dividend. And dividend is mostly it's coming 4%, 4 is, you see, it's keep consistent, right? 3.7, 8, and it's keep growing. Notice this point, every quarter is growing, and this time is 4.7% of their 4.7% the dividend they declare, which is 108 times of their income. So if the common dividend is 1.5 billion, and I can show it to you, their net income is, it was here, right? Net income available, this is 1.42 billion only for this quarter, right? So that's what that was still. So the next phase, what I want to see here is how much the cash now they have. So overall, from the revenue perspective, the return on equity perspective looks good, but do they have enough free cash buffer, free cash flow to support that? So we need to see that. One thing also I'll highlight here, so they have the total employees is 82,499. Out of that, almost 60,000 employees in Canada, 13,000 some employees in US, and almost 10,000 employees in a different part of the world, which is a way huge number. Look at their active digital and online mobile user, right? It's 7.5 billion is in the range. So they're growing this spending, that active mobile user, right? So mobility is also increasing. So these are, so why I'm seeing this? I'm seeing this because I don't want to put the money in the bank which is still doing the same old style banking, because the millennial generation, the new generations, they don't want to go to the brick and mortar store, right? Everything wants to be in the app, and this shows that they are investing in that by their active growth. Okay, so that's what I like about it. So this one again, it's their income is splitted by the interest income, and this is the total revenue. Again, this is a more detailed breakdown which shows interest and non-interest income. I think we have already seen, so no point. Okay, so now let's go back to see more on the liquidity. So this is very big, right? If you see there how liquid the company is. So let's start from the left, the strong liquidity ratio, right? So they have 66 billion surplus over their LCR requirement, which is huge, right? So if this is so this is OSFI, which is the Canadian Office of Superintendent Office. So basically, this is their minimum requirement here, but they have a 30% more buffer on top of it, which is huge. I really like it. I'll just summarize all the points here. They're only doing the loan to deposit is only 67%. So this means even the 20% or 30% people, the cash flow is safe. So they're not very crazy in terms of generating of loan. The next one also, CET1 requirement, right, is 9%, but they are 15 billion surplus over these. So they are CET1. What is CET1? CET1 is basically more. The regulator wants banks to have the more liquid assets. So basically, in terms of when the crisis comes, so they just have, like, for example, cash or cash equivalent, right? Those kind, and they should be 99% is the requirement, but they have $15 billion. And if I say in terms of free cash flow, in average, which is the 23, this is a 5-year free cash flow average I have to care, which is $23.13 billion. So a lot of cash is there. So I'm not afraid that they have given dividend, and they don't cut the dividend by just giving the excuse that, okay, because of the market volatility, when they have the money. So really appreciate from that perspective when I see this number, because if the company is strong and their fundamental is strong, they can generate the dividend. One more thing I want to share, that RBC is the GSIB bank. Okay, so what is GSIB bank? GSIB banks are the bank, basically those are the global bank, right? And those are not like on the region level. So from the Canada, RBC is the GSIB bank. I think TD is also another one, which is ranked in the same categories. For those, they have certain rules. So I can show it to you. So this is their disclosure. This is called Global Systematic Important Bank, and these are the top bank, right? So RBC is one of them. This called, the nickname is GSIB, and this is identified by 5 category in terms of size, how their interconnectedness, complexity, and cross judiciaries, right? The main thing here is, for these, what I'm trying to say here is, they are more scrutinized, right? They have to put extra buffer in terms of the cash. So if regular banks, are saving something, so because of their GSIB in nature, RBC has to preserve 1% more in terms of, in addition to their common CET1, right, which I was saying. They have to put more surcharge between 1 to 3.5%, depending on their score. So since their score is much better, so they only have to do 1%. So say issue exceed regulatory and GSIB surcharge 1%. So RBC has to do 1%. So this is another good point. I'll check mark that in terms of the strength of the company. Now my next question is, okay, how from the economic wise, right? How come the improvement is happening? So let's see from that perspective, and then So let's say this is from the macroeconomic scenarios, right? So the expectation is that right now the Canadian real GDP, which is in trillions, right? Right now it comes down from 2.1 trillion dollar from quarter 4, which is this quarter, to Q2, which is, you see it drops from here, but the projection is that it will grow. Like if you see within the third or fourth quarter, it will try to go up and it will try to cover like this, which is more like a kind of a V shape. So it will come up and then it will grow. So it will, right? So that's how the projection is. This is in terms of the Canadian real GDP. For US real GDP, which is in the US market, we also need to see, because RBC exposure is in US market. So that's the exposure is, okay, it will pick up and then stay, and it will come up as well from 19 to, so within, let's say it will come back by end of this year. It will pretty much almost cover the 18.18 billion, and slowly it will catch up. It will take some time, within up to 2024. So it's a 5-year journey, right? Which is surpass the existing threshold. On the unemployment level, which is rising, and you see it will drastically come down, right? Because for sure so many people have filed the unemployment right now, but will it sustain? No. Because if it sustains the unemployment, why I'm seeing this, right? The less people will pay the mortgage, there less pain, and the banks will suffer. So we don't want, because still, although they have diversified, but the major chunk of the business is still the loan generation, because that's what banks should do, right? So not only in Canada but in US, so major sector is covered. So it seems like unemployment will also drastically come down by the end of this year, and soon people will start working. Now the last but very important question what is in my mind was, okay, that's good, this is the big bank, it is diversified, it has GSIP ranking, so very good in terms of the liquidity, the economic wise we have covered as well. But how it performed in the past, when, for example, when we have the crisis occur, right? Because usually every 8-10 years we have the crisis. So let's see that scenario, how long RBC take to recover from that. If that checkbox is done, then we can confidently say this is a good stock. If it's not, then all those theory maybe we have to rethink, right? So let's see. So here I am on the Yahoo Finance side, and if you notice, this is the RBC Canada RYTO ticker. If you just type RY, it will show the US, because RBC is also trading in the US stock exchange. This is the Canadian Toronto TSX Stocks Exchange. So here you see the dip, which I want to project is in 2009, right? So I have shown here from 2002 to 2020, right? The current market condition. So we all know in 2009 there was the market crash happened, right? During that time, you notice here the market share for RBC crashed from $51 and it comes down to $30, right? 50 to 30, almost $20 drop. But see this, right? Within the same year, it's come back so fast. So that shows the power and the strength of the business. And then from that, it's consistently moving and growing up. We have few dips, but not a lot, right? And then it goes up. And now even it was $107, but now it's up to last year. Yesterday, actually, if you notice, it was 82, and now it is already $10 up. So by looking at this, right, I can see that, okay, this is again one more positive news. So this is the pretty much it. So I like the RBC stock, and then I have invested in RBC stock as well. So I also gain. So that's my disclaimer. I don't want to tell you upfront because I just want to go over the journey. So this is one of the big bank, one of the number bank in terms of the market cap in Canada, and global bank, and this is very strong in terms. So I think from the long term I'm going to keep this bank and keep this bank for long and in my portfolio. And what you think? I also noticed some people commented on other, but I will try to cover those other bank as well. But if you like this video, please subscribe to share others, so other people will also subscribe. I want at least 1,000 people to be subscriber on my channel, and please like and share as much as possible. And if you have any other question and if you like any other ticker, please kindly put in the comments. I will try to cover as well, but my style is more theoretical. If you want me to quickly talk to some stocks, we can talk, but I think we won't do much justice on it. Okay, so thanks for watching. It's thank you for your time, and I really appreciate that you keep liking by liking the video and put your comments, and we can go from and thank you very much for listening and watching. So if I understand some people also put the other bank, so I'll try to cover when their quarterly income will be out, so we have more recent and current data. Okay, thank you very much, and see you on the next video hopefully soon. Bye for now.